Okay, let's get started. Warm welcome to everyone, and thanks very much for attending this edition of the AMIS IFPRI webinar series. My name's Joe Glauber. I'm a senior research fellow, now Emeritus, means old, at the International Food Policy Research Institute. I'm here with my AMIS colleague, Monika Tothova, who's with FAO and who serves as AMIS secretary. This month's webinar is going to focus on the outlook for maize, wheat, and soybeans. Harvests in the southern hemisphere are now finishing up, and attention is now shifting to crop conditions for the fall planted crops in the northern hemisphere, as well as to spring plantings. In addition to the usual uncertainty considering crop and input prices and crop growing conditions, we're also dealing with uncertainties caused by increased trade tensions surrounding tariffs, the possibility of trade wars, which could significantly alter trade flows and market prices. To look at these issues more closely, we're taking advantage of the expertise of AMIS analysts and members of the AMIS Secretariat. Just in last month, the World Bank released its semi-annual commodity markets outlook, their first look at the 2025-26 marketing year. And just yesterday, USDA released its May World Agricultural Supply Demand Estimates report. This is the first WASDE report to look at the 25-26 crop year. This is going to be followed very quickly on May 22nd by the release of the International Grains Council's Grain Markets Report, and on June 6th by the AMIS Market Monitor. And we're lucky to have representatives from all these institutions here on our panel today. Our opening panel are going to provide some of their insights, and let me introduce them. First up, we're going to have John Baffes, who's currently a member of the World Bank's Prospects Group, a senior economist at the World Bank. He heads the commodities unit and is in charge of the commodity markets outlook. John's going to give an overview of the macroeconomic situation that as we look out through the current year. He's going to be followed by Brian Barker, who Brian is a principal faculty specialist in the Department of Geographical Sciences at the University of Maryland. Brian is the lead author and coordinator of GEOGLAM's Global Crop Conditions Report for the AMIS Market Monitor. GEOGLAM is a large platform that monitors using Earth observation data, monitors global crop conditions. And then the third member of the panel is Seth Meyer, who's USDA's chief economist and former AMIS chair. After the panel is finished, I'll turn the discussion over to Monika and let her introduce our discussants. So without further ado, John, I give the floor to you.
Good morning, everybody, or good afternoon, rather, and many thanks to you, Joe, and Monika for inviting me to be part of this distinguished panel for the IFPRI-AMIS meeting. Joe, as you said, we published the Commodity Markets Outlook, the World Bank's Commodity Markets Outlook on April 29th. So it's as fresh as it can be. So for the next 15 minutes or so, I'm going to give you a summary of what our report says in terms of price forecast risks, as well as a summary of what is the current thinking about global growth and in general global macroeconomic conditions. So let me begin by sharing my screen. Can you see my screen?
Yes, John.
Okay, great. Thank you. As I said, we published a commodity markets outlook, the World Bank's commodity markets outlook on April 29th. Let me begin by giving you a summary of what I'm going to be talking about. I'm going to touch upon the macroeconomic outlook. Then I will turn into agricultural markets, energy. I'm going to give you a summary of our price forecast, and at the end I will discuss the risks, and hopefully that will lead to our discussions on risks in general. I'm beginning with a global macroeconomic outlook. I'm using the numbers that were published by the International Monetary Fund during the latest spring meetings, the joint meetings between the IMF and the World Bank. As you can see here, growth for 2025 is expected to be 2.8%, which is down from 3.3% in 2024, and there's an expectation of a pickup in growth to 3% for next year. Now, when we do commodity analysis, we always like to separate global growth into two components: the advanced economies and the remaining countries, the emerging market and developing economies. And that's because emerging market and developing economies play the most important role globally in terms of commodity production, consumption, and trade. And for 2025, for EMDs, again, according to the IMF, the EMD growth is expected to be 3.7%. But again, that's down from 4.3% last year, and with an expectation of a slight pickup in 2026 to 3.9%. Now, comparing those numbers to what the IMF published in January of 2025, you can see in the little table I'm showing to the right of the slide that there has been a downward revision of 0.5 percentage points for global growth, which is pretty much the same with advanced economies and the emerging market and developing economies, and also another downward revision globally for 0.3%. And for the EMDs, it's 0.4%. So to summarize, we have a downward revisions from what the IMF expected, and other agents, by the way, expected back in January 2025 by about half a percentage point. And for the most part, this downward revision reflects the issues with the global economy in terms of policy uncertainty and trade uncertainty. Two other aspects of the global economy, or variables rather, that matter in commodity markets are the US dollar, how it behaves against other currencies, and the interest rate. And here I'm showing the interest rate, the Federal Reserve funds interest rate. To the left, we see the nominal broad US dollar index, which for the past 3 to 4 months, it has depreciated by about 5 to 6%. In general, when dollar appreciates, commodity prices, because they are priced in dollars, go down. And when the dollar depreciates, as it has been the case in the past few months, this negative correlation implies that commodity prices should go up. Of course, that correlation does not, it works most of the time or all the time, but because there are a number of factors, numerous factors that affect commodity price, we cannot clearly see that correlation playing out every time. Now, in terms of the dollar movement, we have seen a lot of headlines that the dollar has depreciated a lot during the past quarter or so. But when we look at a longer term perspective, and here I'm showing you since January of 2022, what we see is that the dollar depreciation that took place during the past quarter, it's not large. I mean, it's comparable by the recent history. It's a bit larger than the depreciation that took place in 2023, but much smaller than the depreciation that took place in 2022. So I would say that probably the headlines that we read in terms of dollar depreciation are a bit more dramatic than what has materialized in reality. Now, to the right, we see the interest rates, the funds rate, and this is pretty much what sets the various interest rates that matter in the global economy, of course, for commodity trade and commodity production and investment, etc. We see the huge increase in the interest rates from nearly zero early in January 22 to a rate of 5.4 in mid-2023. Easing started taking place late last year, but because of the trade tensions and the global uncertainty now, this easing has been paused. This morning, I was reading in the news that the inflation numbers came a little lower than what was expected, so that presumably will give some breathing space to the Federal Reserve Board in adjusting the interest rates. Now, the expectations, according to what I was reading in the past week or so, is that we're going to have the Federal Reserve, there's a high probability of having 2 more cuts for the rest of the year. But the reality is that the Federal Reserve now is kind of squeezed in between two forces. One is expectations for higher inflation, and the other is the slower global growth that I discussed earlier. So they have a kind of tough job in kind of moderating or reducing the interest rates. Moving now to commodity markets, I'm showing the commodity price indices that are important to agriculture. Of course, the agricultural price index, the energy price index, and the fertilizer price index. What I have taken data since quite a long period, since 2018, just to cover a bit of the stable, so to speak, period prior to the pandemic. What we see in the chart in the middle, I have highlighted this area in a different color to indicate this turmoil or kind of high volatility period, which includes pandemic, the Ukraine war, and the Middle East conflict. And what we see is that recently, I would say the past 5 or 6 quarters, commodity prices have been relatively stable following this unstable period, and they are a little higher than they were prior to the pandemic. Now, I calculated some numbers, and when we take the last 4 months, or rather the first 4 months for which we have full data, January of April 2025, and we compare that with the same 4-month period back in 2018, that is 7 years ago, what we see is that energy prices are about 13% higher than they were back then. Agricultural prices 34% higher, and fertilizer prices 66% higher. Now, remember, those are nominal data. When we take into account inflation, which according to my calculations, based on FAO data and some other agencies, in this 7-year period, the global inflation, the median global inflation is about 28%. What we see is that energy is about 15% lower in real terms for the past 7 years. Agriculture is about the same, I would say, in real terms, a little higher, but fertilizers are still higher, about 40% compared to what they were 7 years ago. Again, that's in real terms. Now, getting a bit deeper into agriculture and decomposing that into 3 components, the beverage, the food, and the raw materials component, what we see is that the food and raw material components have been quite stable throughout the past 2.5 years after January of 2023. The exception is beverage prices, basically the skyrocketing, which reflect the skyrocketing of coffee and cocoa prices, clearly linked to weather conditions, caused by adverse weather conditions, and by most accounts linked to climate change. So that's very important to highlight what I was saying earlier about agricultural prices and what others also say about agricultural prices. If those prices include the beverage component, it's those beverages, coffee and cocoa prices, that give this kind of slightly upward movement that we've seen lately. If we exclude those components, we see a relatively stable, gradual decline in food commodity prices. Now, moving to energy prices, on the left, we see oil, which has been under quite a bit of downward pressure during the past couple of years. And now oil is traded around a bit on the low 60s, Brent, which is the international benchmark that we follow. Oil is pretty much subjected by 2 forces, one on the demand and one on the supply, and both forces are pushing it, have a kind of downward push. And on the demand side, of course, we have the headwinds of the global growth and lower demand, but we also have on the shock, so to speak, on the supply side, where OPEC Plus, led by Saudi Arabia, decided to remove the cuts. So pretty much for the next few months or the rest of the year, OPEC Plus is going to add about 2 million plus barrels of oil into the global oil market. Just for perspective, the world consumes around 100 million barrels per day on average. So 2 million barrels is a lot. So in between weak growth prospects and a lot of OPEC Plus production or removal of cuts, rather, we see this downward pressure in the oil market, and that the expectation is that this downward pressure will persist for this year and probably next year as well. Now, when we look at natural gas prices, again, higher prices now compared to what they were prior to the pandemic. In the parentheses here in the headings, I have the percentage changes, which again show what happened in the average last 4 months compared to the first 4 months of 2018, and we see that both the United States benchmark and the LNG benchmark, which is the Asian sort of natural gas price, are about at the same level as inflation. So they are pretty much the same level in real terms as they were back in prior to the pandemic. The exception is in Europe, because they have much reduced supplies from Russia, and that's why real energy, natural gas prices there are about 75 to 80% in real terms compared to pre-pandemic. I have also included coal price here, which again in nominal terms is 6% up, but in real terms is much lower than prior to the pandemic. The reason I'm including coal, apart from being very important in electricity generation, is that China globally, natural gas or the part of natural gas that uses the fertilizers that use nitrogen, globally they are made out of natural gas, but China makes most of its fertilizers, the nitrogen-based fertilizers, from coal. That's why I'm showing that energy price. It's very important for the fertilizer production in China. Overall, apart from natural gas prices in Europe, we see this weakening across the board in energy prices as well. In terms of our price forecast, apologies, it's a very busy table, but I would like to draw to your attention to the fourth column from the right, which is the percent changes from T-1, meaning that in the fourth column to the right, I'm showing you the percent change of our forecast in 2025 versus the actual number that took place in 2024. And as you can see in that column, we pretty much have negative numbers all across in most of the commodity price indices, with the exception of beverages. I have highlighted them, which is nearly 20% up expected in 2025 forecast compared to what was in 2024. A second exception is, of course, precious metals, which have pretty much skyrocketed, led by gold, and we expect those prices to be 33% up now this year in 2025 compared to 2024. And the third exception is fertilizers. Now, beverages, just to highlight what are the reasons behind those three exceptions. Beverages, again, as I said earlier, is cocoa and coffee, and this is driven by weather conditions and most likely linked to broader climate change issues. Precious metals, it has to do with global uncertainty, and again, as we all know, when global uncertainty increases, investors look into gold and other precious metals as a safe haven investment alternative. But what's interesting in precious metals now is that also central banks have turned into purchasing, increasing their purchases of precious metals. So precious metals reflect both the global uncertainty, but also actions by central banks. And a lot of analysts and economists have highlighted the point that the central banks kind of replace, in a sense, the holdings of US dollar by gold. But again, that's a much longer term and bigger issue. The third exception is fertilizers. And it's interesting because we saw all energy prices being under downward pressure, and fertilizer prices is the most energy intensive commodity, but what we see in fertilizers is the opposite move. Most likely, the main reason for the fertilizer upward sort of expectation for 2025 has to do with the reduction on fertilizer exports by China, which in effect has sort of shut down exports of some fertilizers. So just to summarize, the three exceptions: precious metals, policy and uncertainty driven; beverages, weather driven; and fertilizers, policy driven, most likely by China. For the rest of the commodities, we expect downward pressure, reflecting two factors: pretty much the global economic environment, which is uncertain and trade policy environment. And on the other hand, we have good supplies, I would say, for most commodities. Comparing this year to other years, I would say that both agriculture and energy markets, I would say that are well supplied, thus putting downward pressure on commodity prices. And just to conclude, to give you an idea about the risks, I'm not saying anything new here in the sense that those are the risks that everybody discusses. On the macro side, we have weaker growth prospects, issues about whether inflation is going to come back, higher for longer interest rates, and trade tensions. So those are the four pillars of uncertainties and risks on the macroeconomic side. On agriculture, well, we have weather issue, which is always an upside risk. Traded biofuels, it can go both ways and can have either upward or downward pressures on commodity price, and better than expected crops, which are going to hear later on in the presentations, which is another downside risk. On energy, I would say we have mostly downside risks, especially the latest push by OPEC to pour more oil into the global market. So there we have probably the more downward pressures that I see across most commodity markets. Lastly, fertilizers. As I said earlier, we have export restrictions from China. That's probably what keeps fertilizer prices a little higher, the exception to the rule. With this, I would like to end my presentation. As I said earlier, we published our commodity markets outlook in April, but for the next 2 months or so, we're going to be publishing every week one blog, which is going to cover one specific market, each specific market that we analyze in commodity markets. So please stay tuned for those blogs. And of course, in the second business day of the month, of each month, we publish our pink sheet, which summarizes price developments for the previous month. With that, I would like to end my presentation and hand over the floor to the chair.
Great, John. That really sets the stage, I think, very, very well. Our next speaker is Brian Barker. I want to remind people that we do have a Q&A session, so please submit your questions on IFPRI.org, Facebook, LinkedIn, YouTube, Instagram, or using the hashtag AskIFPRI on X. So with that, Brian, the floor is yours.
Oh, thank you very much. Can you see my screen?
Yes.
Okay, wonderful. All right, good everyone. My name is Brian Barker. I'm with the University of Maryland and GEOGLAM on Earth Observations and Global Monitoring Initiative. I'm going to quickly go through crop conditions for wheat, maize, and soybeans based on crop conditions as of April 28th and from our publishing on May 1st in the Crop Monitor for AMIS and a Global Monitor. All right, globally, crop conditions are favorable for both maize and soy, while there's still some areas of concern for wheat, particularly looking at winter wheat in some areas of spring wheat in Central Asia. In the Southern Hemisphere, we'll quickly go through that just because a lot of the harvest and switchover is going on right now. In the Southern Hemisphere, harvesting is ongoing for maize and soybeans as winter wheat sowing is beginning in Australia, Chile, and Southern Africa. In South America, Argentina's had a really sort of a mixed experience going over the season due to dry weather early in the season. Thankfully, rainfall since February has helped stabilize a lot of those yields, particularly in the main producing areas. However, in the north, we did see a loss of rainfall at the wrong time, and we are seeing poor conditions for both maize and soybeans in those northern areas. However, excess rainfall right now is actually becoming a problem for a lot of the farmers as they attempt to harvest their crops and get it out of the fields. In Brazil, conditions have been much better, with exceptional conditions particularly for soybean crop across the country, and also the spring planted maize crop in the south. Despite the earlier dry and hot conditions there, the spring planted maize did well in the south. And conditions are favorable for the larger producing summer planted crop, which will begin harvesting in June. In Uruguay, both maize and soybeans are under harvesting and under favorable conditions. And in Chile, as I mentioned earlier, the sowing of wheat is beginning. Moving over to Southern Africa, the maize harvest is concluding across the region under generally favorable conditions, thanks to some mid-season rainfall. However, there's some areas of concern due to final yields being below average in a lot of areas such as Angola, Madagascar, South Africa, Zambia. In South Africa, heavy rain recently is really preventing farmers from accessing their fields to get their crops out, as we're seeing areas of maize beginning to germinate in the stalks and soybeans actually in their pods as well. All right, shifting north into the northern hemisphere, we're looking at winter wheat continuing to develop as the sowing progress for maize and soybeans and spring wheat continues. In North America, conditions have been generally favorable throughout the US and Canada. However, in the US Great Plains and part of the Canadian prairies, we did experience dry conditions. This is particularly impacting winter wheat in Nebraska and South Dakota, and along with some areas in Texas and Kansas. However, these dry conditions did benefit the early sowing of maize and soybeans in the Western Corn Belt, and conversely, the earlier wet conditions did really slow down the initial sowing in the Eastern Corn Belt for those, particularly for maize and soybeans. That being said, winter wheat does have, as many people say, 9 lives, so we do expect a lot of that crop to come out quite well in the US. Shifting over to Europe, we're seeing crop conditions as overall favorable, despite a water deficit that has really developed since March in parts of northern Europe, extending from northern France all the way over to the Baltic countries, passing through Germany and Central Europe. Now, this situation has been positive for some areas of winter crops, particularly if you look at northern France, where we did have a really wet winter, and since this really helped the winter wheat dry out and develop. And that's also the dry conditions that supported the sowing of the summer and spring crops. However, it could hurt crop yields in some areas, as you can see from the map, if we don't receive rainfall over the course of May. In Ukraine, the precipitation deficit has really been since the beginning of the year and is really beginning to stress winter wheat. So we are going to continue to watch those conditions there, as sowing for maize and soybeans is currently favorable and underway in Ukraine. In the Russian Federation, winter wheat experienced mixed sowing conditions in the fall, really due to the dry weather and some really questionable conditions. However, with the decent precipitation over the winter, we are seeing a recovery, particularly in the southern areas and parts of the northern central district. The rainfall in May will really help determine those final yields for winter wheat. That being said, the sowing of spring wheat, maize, and soybeans is currently underway and under favorable conditions. In Turkey, we had prolonged dry weather and cold spells, which really sort of delayed that crop growth and reduced the yield prospects for winter wheat. That being said, maize is sowing under favorable conditions. Shifting down into Middle East and North Africa, we are seeing wheat harvest ongoing this time. However, we are seeing reduced yields in many areas due to the below average rainfall during the season, particularly looking at Morocco, northwest Algeria, and then parts of Lebanon, Syria, and northeastern Iran. Unfortunately, conflict continues to have an issue contributor to poor yield outlooks in Lebanon and Syria. And furthermore, desert locust outbreaks are starting to spread across northwestern Africa, particularly looking at spring breeding is expected in Morocco, Algeria, Tunisia, and Libya. Moving into northern sub-Saharan Africa, looking in West Africa, we're seeing the maize season is currently being sown, moving up from the south into sort of the Sahel areas under favorable conditions. Despite localized rainfall deficits, we are seeing generally favorable conditions in West Africa. In East Africa, dry conditions unfortunately have continued to impact the crop development. Even with recent rainfall improvements, we are still seeing below average conditions there. That being said, we are expecting above average rain precipitation over the next little while through July, so that should help improve the crop conditions there. As you can see, that being said, wheat harvest concluded in Sudan. We saw poor yields, which is quite anticipated due to the impacts of the ongoing conflict in that region. Now, shifting over to Central Asia, winter wheat harvest is beginning in Afghanistan, while the crop continues to develop across most of the rest of the region. Spring wheat sowing is now underway in southern Kazakhstan and the rest of the region, all the way over to Mongolia. Unfortunately, we are seeing some early dry season conditions, which we will continue to watch going forward, so we do have a lot of questions about how that crop will continue to develop. In South Asia, winter wheat is being harvested under favorable conditions in Bangladesh, India, Nepal, and Pakistan, except for some rain-fed areas in eastern Pakistan that were impacted by drought this season. Overall, we're looking at quite favorable conditions, particularly in India. Maize for the Rabi season in India is being harvested, while the sowing of smaller seasons is ongoing in Bangladesh and Sri Lanka. Shifting over to East Asia, despite dry conditions over the past few months in the northern wheat belt, China's winter wheat is currently under generally favorable conditions. However, recent hot and dry weather has developed some short-term drought concerns, coupled with the ongoing forecast over the next little while of these hot and dry conditions really ramping up and continuing. We do have some questionable yields over the next little while, particularly in Henan province. That being said, maize and soybean sowing is undergoing under generally favorable conditions, but we will continue to watch particularly in the southeast as there's some dry conditions that have developed there. But overall, we do expect favorable conditions in East Asia and China. All right, thank you very much.
Great. Thanks so much, Brian. Good. I remind everyone about the Q&A, so you can submit those on ifpri.org, Facebook, LinkedIn, YouTube, and Instagram and X. But I'm going to now turn to Seth Meyer, who's USDA's chief economist. Seth has been on this program many, many times, but I don't know if this might be the first time you've been on as a presenter, Seth. So I hope you do well. Go ahead.
All right. So let me share just a reminder to everyone that we just finished lockup yesterday, and that is that okay. Let me know if you can see my presentation here. I'm putting it into presentation mode.
Yeah, it's coming up now, Seth.
All right. So I think what's important to note here is we just put out our first WASDE report for the new year yesterday. And in that's the first official look at the global 25-26 crop year. We get a little domestic, a few domestic statistics, including winter wheat production from our colleagues at NASS. But what is important to note is I put this presentation together late yesterday, and we had to make significant changes over the weekend in our global forecast because we had change in US-China tariffs as the tariffs were lowered over the weekend, and other issues like the ban in trading, live animal trading with Mexico. So we had several changes come in at the last moment that we needed to incorporate into our global supply and demand balances. So that is to say, we impose the reduction in tariffs between the US and China and assume that reduction is maintained. And any other policy in place, we hold that policy in place. I show you this just as a general sense in underlying. This is going to be a US, I'm going to try and frame what's going on in the United States and kind of make a broader assessment in the global level. So this is our receipts that we do internally for the USDA in terms of overall US cash receipts for commodities, noting that commodity prices, crop prices, basically across the board headed lower. We have come off the third price spike in the last 20 years. That third price spike in the last 20 years bring down the receipt side, but don't bring down the cost side for producers. While I can obviously see this in the United States, it is present elsewhere in the world too. Our assessment overall, we also talk about our row crop acreage in the United States. I'll talk about things in a global sense, but what you can see in the United States is a shift into feed grains out of oil seeds in the general sense, and then also some other aspects of production in that wheat area continuing on its decline. There appears to be plenty of wheat at a global level. A little more in the United States in terms of the shift is obviously into crops like corn, or at least the intention that producers exhibited is into corn. At a global level, corn supplies seem much tighter, not just in the United States. We'll actually have growing stocks in the United States at the end of next season is our assessment, but overall, corn markets being a bit tighter and farmers sensing at least some risk in soybeans, moving out of soybeans in the United States. When we look at overall corn production, here is our global corn production, both from the prior year and for the coming year. You'll note an overall expansion to new record production at a global level for corn in 25-26. You'll also see some back year adjustments, and it's important to remember that the second crop corn that is being harvested in Brazil, that is finishing up there, is the back year, and an assessment that crop is a little bit bigger. They had rain which continued on towards the end of the season, which is also always the decider of whether that is a large crop or not, and in this case, a pretty good sized crop. So as we go into next year and perhaps a return to more normal yields, but with an expansion of area, we see still a modest expectation that a year from now, we'll be looking at a Brazilian crop, which is yet 1 million metric tons larger. Overall, you can see there a big expectation in the United States of now producing over 400 million metric tons. Again, area being shifted into corn. And if we take just a weather-adjusted trend yield, a fairly normal weather yield, you get a very large crop with overall production at a global level expanding. If we kind of look at the balance sheet, this is one of the crops amongst the 4 AMIS crops where we actually see, I draw your eyes all the way down there to the ending stock number for 25-26, and reminding everyone here that despite the fact that we expect some growing production, that ending stocks, our expectation is ending stocks will tighten. That is what has been supporting a bit of price strength within corn recently, in that, hey, we've got some expectations for growing feed use and some expectations of growing trade and tightening up ending stocks at a growing level despite increases in production. Beans a little bit interesting here. So we had to make a change here over the weekend involved in the reduction in tariffs between the United States and China. China being obviously our clear #1 destination in the United States for soybeans and the biggest destination amongst all countries for soybeans. So the change in tariff regime between the US and China certainly changing some of the dynamics of where soybeans are flowing in the world. Here, just an underlying long-term trend that South America continues to grow. Our expectation is that we will add several million more metric tons in the coming year in soybeans, as both primarily we've got growth in area and yields in South America, and the big driver in the past has been China, and the #1 factor here is where is demand growth to be seen. An expectation that a return to more normal trading relationship with China will support a 4 million metric ton increase in China's imports of soybeans into the new year, and at the same time seeing some growth in raw bean demand elsewhere in the world as we've seen countries set up their own crush facilities. So we need increases in global demand that are pretty robust given what we're seeing with production growth in South America through a combination of area and yield growth. Again, we are still getting into the fields here in the United States in terms of corn production is progressing well. We'll shift to beans, and this is the new crop corn to bean price ratio. So as we look here, this is supportive of what we talked about as a shift of corn of area from soybeans into corn. So this is the ratio of soybean prices over corn prices. So the lower this number, the more favorable it is to corn. The higher this number, the more it suggests beans. So it's on the lower end of the historic range, suggesting that indeed the price signal is for farmers in the United States, at least, to move into some additional corn area as they finish up planting and corn and move into beans. Now, on global wheat side, you know, I think that there has been, I've been surprised a bit at the calmness in the market as we continue to have an active war zone for where 30% of global wheat is traded out of the Black Sea. But this tells you a little bit about why the market has become pretty complacent, pretty satisfied with where wheat prices are at. We have both decent production globally in 24-25 with an expectation of about a 1% growth again next year in 25-26, where we see some expansion in, despite the fact that we're getting a little around 8 million metric tons, 9 million metric tons of growth year over year. And as you can see, an expectation that the European Union crop might be a little smaller this year and growing into the next 25-26 crop year. So again, raising that crop because of good current conditions in the European crop, showing a pretty good year over year increase after last year's smaller crop. So again, overall growth in global wheat production. But here, as I said, one of the tightening up in soybeans, but when I look at global wheat and I look at global rice and I look at global soybeans, I see more flat year-to-year changes in global ending stocks. It is really corn where we see some expectation of tightening global stocks. Here again, you see, despite the increase in production, that we're talking about increases in use, and so ending stocks remain pretty flat. When we talk about rice, an expectation again that India will increase its production a 10th year in a row. We've seen them really come to dominate the export market, and India really be a driver of rice trade. And it's important to note that that export ban is really where we observed some volatility in rice prices as the Indians pulled themselves out of the market for domestic reasons. And that really has a disturbing effect on global markets when they have underlying domestic policies, which have very large production of rice and export of rice until they don't, for domestic reasons, again, pushing all that volatility onto consumers in the rest of the world. And as we've seen here, an expectation that with those larger crops and the removal of the export ban in India, that we will push rice prices generally lower as a result. So again, India's decisions on trade and overall, they're the driver in global rice prices. In the US, just to kind of, I put this graph in here as a reminder that weather has the ultimate say. While we will predict some of these crops around the world, there's a lot of time left in the growing season, both here and around the world. Our general expectation for prices, generally lower across the board. Generally lower across the board for all these commodities. Some support for beans, perhaps reminding you all that while we have South American area growth, we're pulling back in the United States in terms of overall supply. These are US prices, so we get a little support of soybeans relative to other commodities. But the general sense is lower prices overall. And reminder that this assumes no, the reduced tariffs that were announced this weekend between the United States and China. One last thing I want to cover really quickly is that it isn't just what farmers sell it for, it is what they receive in terms of, it's not just what the cash comes in, it is also the cash that goes out. So when we look at individual expense categories, we do have several individual expense categories that continue to rise, putting a very significant squeeze on US crop producers, and it's not just in the United States. We've gone from high commodity prices to quickly reverting back to declining lower commodity prices, and at the same time, input prices remain sticky. And with that, that's my last slide, a quick look around the globe. Thank you.
Great, Seth. Thanks so much. Good. I'm going to turn this over to Monika in just a second, but I want to remind everyone to get your questions in. Again, we have a couple in already, but Monika's going to bring on our next panel. And Monika, with that, I'll turn it over to you.
Thank you, Joe. Thank you, and thank you for our main presenters who contributed to discussion, Joe, John, Brian, and Seth. So I'm very pleased to bring in our panel of, let's call them discussants, of experts, of commodity analysts. So with us this afternoon, we have Li Yang, economist from the Food and Agriculture Organization of the United Nations, who follows the oilseed markets. Then we have Erin, Collier, economist, also from the same organization, who follows the grains. And last but not least, Nathan Kemp, senior economist from the International Grains Council. So if you all could join me on the screen, and so we can have a discussion. I would start with the first question to all three of you. We heard about the macroeconomic situation, we heard about from Brian about the outlook, and we also heard about the Seth, from Seth about the latest was the projections. So I wanted to ask the Erin and Nathan, what is your first reaction to the presentation that Seth made in your respective areas? So I would invite Nathan to comment on maize, Erin on wheat, and Dee on soybeans. Over to you, Nathan.
Well, thank you very much, and thank you for having me today on this panel. Just like to say thank you, Seth. At the IGC, we published 2025-26 forecasts for all our grains, core oilseeds, and rice back in March. So we've been waiting for you guys to publish your next report so we can check our own numbers and see where we stand in terms of production, trade, stocks. So the May Wednesday for us is a very key key publication. Myself and my colleague has been poring over the reports since yesterday. And I'm pleased to say that the big messages are broadly similar. You've outlined very well today in your presentation there. Of course, we're seeing some differences, but we'll know more as the harvest come in line and as we get into the next trade year. So in terms of maize, then we agree with your forecast for a record maize crop. We're seeing a big potential production in the United States as well, and we agree with what you said about Argentina, Brazil, and Ukraine. So we have no arguments there whatsoever. We have a slight disagreement in terms of trade. This may flow from different marketing year periods. At the IGC, we're looking at a July-June basis, so this has very perhaps differences, which the nuances flow through perhaps to some different numbers. But again, no real arguments. And perhaps the only difference we have is in terms of stocks. We have in the world stocks estimate slightly up this year, as you very well put in your presentation. You think stocks are going to be slightly tighter. I think this stems from a slightly overall larger production number on our side. But interestingly, we're seeing now that both of our organizations are quite close actually on these global stocks numbers. So really no arguments. I'm quite relieved that you guys are seeing something similar to us at the IGC. And if I could just ask you one question, it's been said by much wiser individuals than me that it's tough to make predictions, right? Especially about the future. And we've found doing these set of projections really quite difficult this year, not even leaving aside, everything going on with tariffs, etc. Did you and your team find one particular area was harder than others to look at? We particularly struggled with the China outlook for maize, I'd say. Is that something that you also struggling with?
Yeah, I mean, for us, I think that this may surprise you, but I guess since we're US focused and the Chinese really weren't taking much maize from us, and although we do have, so we've got 8 million metric tons in the 24-25 crop year, growing to 10 million metric tons of imports to China in the 25-26 crop year, that isn't us really selling it to them. So I think we've been really occupied with the on tariff, off tariff, trying to impose those policies. I think that has eaten up a significant amount of our time in terms of what are the tariffs that we should assume. So yeah, there are the usual things we worry about, and then that push all of those things aside, and we focused really on that and spent most of the weekend trying to make the corrections necessary to bring the latest tariffs in place.
Thank you both. If we can move to Erin, what is your takeaway from Seth's presentation?
Yeah, absolutely. Thank you so much, Seth. As always, a wonderful presentation and always fascinating to get your outlook on this. I would say similar to Nathan on the maize, that our current kind of outlook for wheat is more or less in line with you guys. There are a couple differences. We're actually just about to be updating our forecast now. So currently our forecasts are a little bit more in between last month's numbers and this month's numbers. But the general outlook is in line with the overall, obviously, corn tighter than wheat markets right now. Wheat is pretty ample supplies. As far as production outlook for 25, 26 coming up, you guys, it looks like, are expecting a pretty good increase in production at the global level. Whereas our outlook, again, we're kind of between last month's figures and this month's figures updated, but our outlook is perhaps a little bit more subdued on the production side. Our most recent forecast was pointing to more kind of on par, maybe stable from last season, but also seeing obviously the increase in the EU leading the growth side. So I think that's really the big major factor. But again, as we update our numbers this month, our figure may be coming up a little bit, but as of now, we have maybe a little bit more subdued production outlook than you guys on the wheat. And then on the demand side, I've also been it's interesting to see that demand has been so subdued, especially for, I mean, I guess for U.S. exports, we've seen U.S. prices get so much more competitive recently, but still sales kind of starting to slow down at the end of April. But, obviously maybe with the new crop sales, maybe that starts to pick up, obviously. But yeah, I think overall, obviously that's for demand, in my point of view, it's always kind of feed is really the big swing factor. Food, other use is always kind of pretty stable, but feed remains the big swing factor. And now with corn, all these ample, farmers shifting to corn, then that kind of answers that question. But yeah, I think overall broadly in line, and just, yeah, look forward to kind of getting your take as well. I don't know if we want to jump into it now or we want to wait, Monika, but curious to hear your thoughts as well as the policy impacts on wheat markets as well.
Okay, well, I'll jump in and I think that maybe, one of the, as you noticed, one of the areas we did make a big production increase was in the European Union, right? So pretty good favorable growing conditions. So we had a little bit of an increase when we look out at the 25-26 crop year. That's probably, that alone could probably explain a fair amount of maybe what our differences are. An increase year over year in the Chinese crop of a couple million metric tons as well too. So yeah, we do have a pretty good price increase. There's going to be a fair amount of wheat around there. We talk about tightness. I'm corn being one of the few where we have declining global carryout, but it's not as if there isn't a lot of corn around. I mean, especially in the US with our much larger crop, we are actually expecting our own carryout stocks to increase year over year. So there is plenty of crop around. I do wonder, as you said, there seems to also be this overhang for wheat. Certainly perhaps providing a cap on any rally in corn because of its ability that excess wheat out there to feed. But right at the moment, we don't need it. I think one of the interesting things for me, and just because I'm here in the United States as well too, is we've had pretty wide open planting weather in the United States, and there, there's some people will say that leads to perhaps some decision to plant more. I don't know that really holds, but we'll see how much corn area we actually end up with this wide open planting, where it is not a factor in farmers' decisions for their acreage split between corn and soybeans.
So speaking of soybeans, let's bring Dee into the picture. Dee, what was your reaction?
Yes, thank you, Monika, and thank you, Seth, for the wonderful presentation. And actually, this was as everybody knows, it's a market, big market tender, and actually, market are eagerly waiting for the numbers. And I've seen actually yesterday the CBOT already reacted, and the bean prices, so USDA was projecting was a little bit higher yesterday already. Probably not only to the announcement by US and China that they will suspend some of the tariffs and also lower the other parts, but also the USDA report that namely the US carryout will be a little bit lower than what the market was expecting. And I think at this point, I will not argue with anything about production, because as we know, we took the planting intentions for the US and for South American countries. Their plantings will only start at the end of this year. So it's probably too early to make any concrete projections. But I think it's very interesting to learn about the opinion of USDA about the trade relations between China and the US. As we know that even though US and China now agrees on this 90 days suspension on the 24%, and also slash 91% on the rest, but now we're for the 24-25 season, we're at the end of the season, and typically the US export seasonally is already declined to almost a minimum level. And then the actual impact will still be on the 25-26 season, which will be after this 90-day suspension. And I think it's $1 million question. Nobody knows what will be the final outcome of these 3 months, but still, I think it's very interesting to learn about the USDA projection on this perspective. And even I think if the tariffs will be lower and might be even more optimistic export prospects for the U.S., meaning that maybe the carryout for the 25-26 season in the U.S. might be even lower, so which will be a little bit supportive to the prices. And yes, I think we are also working on our projections for the new season, and I think we will also considering various factors, and we will publish in the June AMIS Market Monitor. Thank you.
And so, Dee, I will tell you that it was tough, right? The big swing here is to some extent is China and price. I think that I might even ask you a question here, which is our expectation is I think we have a 4 million metric tons. We're 108 million metric ton trade with China. China imports to 112 million metric ton imports in China. I think there's plenty of beans around. I think that, you were talking about it could lead to an even better U.S. trade. I guess my question for you is, first, does 112 million metric, I'm not asking you to give me your number early, but is 112 million metric ton trade with China, kind of a 4 million metric ton bump, make sense to you? And I worry a bit about U.S. trade overall in that there seems to be a lot of South American beans coming, supply availability, which is going to provide us with a lot of competition. So instead of you asking me a question, I'm going to ask you a question.
Yeah, thank you for the question. It's a very tough question, of course. And for the time being, I cannot review any numbers because we will not release the first 25-26 until about 3 weeks after. But in general, I think your number of 112 million tons of trade might be reasonable because, in China, so far there are some policy initiatives in China trying to reduce the dependence on the imports. In particular, there are several initiatives trying to encourage the plantings in China domestically, as well as reducing the soy meal inclusion ratio in the rations. And so far, we have been seeing, at least in the 24-25 season, is that according to what we have monitored from the exporters' side, the Chinese imports are still quite substantial, and it's around 110 million tons for the 24-25. And then in the 25-26 season, I think it's still essentially nails down to the feed demand in the Chinese market, especially on the pork industry, because in China most of the soy meal goes to the pork sector as well as the poultry, but the poultry is not as big as the pork sector. So far, I think according to the ministry's information, the hog inventory in China are still in a reasonable range for the past quarter, and I think at least the situation now is stable, and we might see a little bit increase in the Chinese import demand.
Thank you. It seems like we don't even need a moderator. You guys can kind of continue the discussion, but I will come in and I will bring all the other speakers, John and Brian, if you can join us on the screen. So, and Joe, if you can help me moderate the last half an hour of this discussion. So I will pass the floor to you, Joe, before I ask the next question.
Yeah, no, perfect. And this was excellent. I think this shows, I think it does show the sort of expertise we have in AMIS, and I think that's quite good. There are a few questions have come in already. We have some as well, but one of the ones I'd like to start with, and John, I think I'm going to direct this one at you. So a question came in broadly just on, well, what do we call food? I mean, and I think one thing to talk about is, we see FAO puts out a food price index. There are retail food prices. There are, the word food is tossed around pretty loosely, I think. And if you can kind of just give a quick overview of between commodity prices and retail food prices and all that, I think that would be helpful.
Thanks, Joe. I'm so glad that you asked this question because we often get that question, especially from journalists, and we say food prices, and some people think food prices what they buy from the supermarket. Others think of food prices what they eat in a restaurant. And on the other extreme, you have food prices, what's the farm gate level, what the kind of farmer produces. Now, from our perspective, from the World Bank's food price index, what we count as food is the commodities that go into food production, and that's, you know, the wheat, rice, soybeans, maize. So that's the main crops, but we also have another food component, what we call it the other foods, and there we have some meats types like of shrimp or beef or some fruits such as oranges and bananas, etc. But let me highlight the fact that when we look at prices of those food commodities, we try rather to measure them at a FOB level, meaning that we try to strip out as much as possible or a post kind of FOB aspects like transportation and other issues. So, but not in all cases we are able to do that. Sometimes we have to go to CIF level, but regardless, in some respects, it's the component that reaches the border of the country at a bulk level. This is what we call as a food price index. Now, I understand the FAO has a kind of similar, kind of broadly speaking, way of doing in terms of calculating their food price index, but they have different composition of prices. They have more, we are very heavy on grains, but the FAO has a much broader composition. But I think the basic idea is the same. But at this point, let me also make a clear distinction between our food price, which, as I said, is kind of CIF or FOB kind of calculation, versus the food component of the CPI, which includes things that are bought in the supermarket, which includes things that sometimes are bought or eaten in the restaurants, etc. And in fact, even the CPI component has, some subcomponents, the food components or items that are purchased from the supermarkets versus the food component that it's consumed from the restaurant. But this is a huge difference. And from what I understand, the statistics that I have read, the primary commodities that we follow, meaning the World Bank, the FAO, etc., it accounts for about, again, that's a rough number, something between 10 and 20% of what people pay in the supermarket. You might have heard of a statistic that was popular a while ago, and is probably still relevant, that when we buy cornflakes in the supermarket, the cost component of the box is much higher than the cost component of the actual wheat or corn that goes into the cereal or the cornflake. So that's what I had to comment on the food price component.
Yeah, no, that's great, John. And I'm going to turn it over to Monika just so she can say she might want to address the FAO food price index issue a bit. But it certainly goes a long way of explaining why we've seen this relative decline in commodity prices since late 2022, where wheat, corn, soybean prices have all come down, yet food prices remain stubbornly high. In fact, we're increasing for many aspects, and indeed in some countries, of course, exchange rates matter a great deal as well. So the price of wheat denominated in US dollars may be falling, but rising if it's in Egyptian pounds. Monika, you want to say something about the FAO food price index?
Sure, thank you, Joe. So similarly to what John said, we are talking about food commodities, right? The FAO food price index covers cereals, vegetable oils, meat, dairy, and sugar. Those are all markets for which you have global commodities in place. We often are asked to include different types of foods, for example, vegetables, fruits, etc., etc. But if you don't have the global market, it is difficult to come up with the global food price index. And it is mostly, as I said, on the export level, they are some price series for which we cannot really guarantee export, so we use the import prices. But it is, I admit it might be a misnomer, and I spent quite a bit of my time when I talk to journalists explaining that there is indeed a huge difference between how the food price index behaves and the prices that consumer pay at the supermarket when they are buying the pasta, bread, etc., etc. As the commodity share is also one of the reasons is quite small in the final product. So I hope it answered the question from the floor that we had here. So if you allow me, Joe, I would ask Brian a question. Brian, I mean, we hear quite a bit about the increasing temperatures. So the warmer temperatures indeed might be good for news for some countries, yet at the same time, they are increasing the risk of late frost damage as the crops are developing earlier. Could you a little bit elaborate on this aspect of a warmer temperature and the risks that they might be for the crop development? Thank you.
Certainly. Certainly. Basically, if we look here, as the temperatures globally increase, we're seeing an elongation of the growing season in many regions, particularly in the northern hemisphere at higher elevations and northern latitudes. And as a result, you have a lot of these crops, being sown earlier. We're having a lot of the winter crops start regrowth earlier. By up to 2 weeks, we're seeing a change in up to 2 weeks over the last several decades, which is considerable when you think about the season. As such, while this has been beneficial for a lot of crops expanding from their traditional geographic ranges, and for having a longer development period before sometimes you have a drier season near the end of the season, you also heighten the risk of a late spring frost, primarily due to the overlap of these early vegetative periods, and then where you have these traditional periods of frost due to atmospheric movement. And so you're running into additional risk, particularly with frost and other things, even though you have beneficial components to these warmer temperatures.
So, Brian, do you think it's more in the northern hemisphere, or do you observe this also in the southern hemisphere, or is there a difference between the hemispheres when you speak about the extending the crop season? Take it as you are talking to somebody who doesn't know much about it, right?
Thank you. No, primarily a lot of the research has been mostly in the northern hemisphere, but we are seeing a little bit of that in the southern hemisphere as well, but it is definitely highlighted in the northern hemisphere.
Thank you. There are a lot of questions about the trade tension, so I will ask all our panelists a question, but Seth, I will start with you. Are the U.S. farmers concerned about the trade sanctions at the moment, or they are concerned about many other things, but not exactly about the trade policy?
Oh, I think that U.S. farmers are watching all of this and looking to, I mean, and as they're going into the field, thinking about how it might affect the crops that they've planted. But I think that here in the U.S., there has been a lot of discussions about trade negotiations, about trade actions. So they're watching both retaliatory tariffs that have now been pulled back off on China, and at the same time, they're looking to see what might be inside trade negotiations that appear to be progressing with the UK, or maybe occur with India, or maybe occur with Vietnam. And so I think that there's a lot of uncertainty here. And so producers are obviously looking at this, but the hope is, again, for additional market access going forward.
Seth, let me have a follow-up on that. In part with the tariffs, obviously these 145% tariffs or whatever were pulled off. We now have a 10% tariff on soybeans. It's not zero. There's still a 10% tariff. And in fact, we had a 25% tariff during the 2018-19 trade war. We had big drop in soybean exports to China certainly in 2018. I think they were down on a calendar year basis almost 80% to China. So I guess the question is, what level is the concern? When do tariffs become pretty much prohibitive? And what's the role of, say, state trading enterprises and that sort of thing in this mix?
Yeah, I mean, you gave an example of tariffs under the previous trade friction, and I'll note that trade with China wasn't zero either, despite what tariffs that looked prohibitively large. I mean, I think the state-owned enterprises play a important role here, but also not one that is really very transparent. I mean, if COFCO takes a load of beans, do they pay the tariff? Is the tariff moving the money from one pocket to the other pocket? You know, they're a state-owned enterprise. And so I think they absolutely played a role. It's not a very transparent role, but this will be one of the factors in terms of, yes, we'll have tariffs and they're not zero, but how do state-owned enterprises view even those limited tariffs? Are they really tariffs for them? I mean, absolutely, I think that we have discussed this before. We can discuss it again, that China is the vast majority of the soybean trade. So you can do some reorganization. I think when we when we did our WASDE forecast last month, it was only for the 24-25 crop year, and we didn't make much changes, and that's because we don't trade much with China in the second half of the year. So we'll observe again after harvest where we are at, and that's why I think that the market will be very focused on successful resolution and opening up new trade. But one thing I didn't get to ask Dee about, and then maybe I'll be interested in hearing Dee comment on is where else are we seeing some growth in whole bean trade and additional crush elsewhere in the world? And so we kind of think that despite this, we only had a decline of 1 million metric tons in trade year over year in soybeans, even with all that South American competition because of some of the growth in demand. Sorry.
Yeah, no, that's great, Seth. And I will let Dee come in. One thing that I think also to bring into this is the whole biofuel discussion, because obviously that's been a big impact on U.S. domestic demand, but also we know that biodiesel is very important in other areas of the world as well. That's affecting. We had a whole webinar on that just last month or 2 months ago. But Dee, go ahead if you have anything to add.
Yes, so thanks. And for the tariffs question, yes, indeed, as we've seen in 2018, that even though the Chinese side imposed 25% tariffs on US, there are still some quantities going to China. And I think as of now, what I've been reading now is now, even though they reduced this 91%, and they were still some previous 10% already. And I think the current tariff rate that China imposed on soybeans is around 23%. So it's comparable to the 2018 level. And so to put this into perspective, I think this actually gives a lot of room for the US, but also for the South American origins. And in fact, since 2018, we've seen that the South American, especially in Brazil, the plantings has been growing steadily. And every year they are harvesting a good crop. And now it has been almost 40% more than what the US has been able to harvest. And this actually gives them a lot of market rooms and also market shares. And with regard to the US situation, and as Joe just mentioned, even though that the export prospects are a bit uncertain, there are might be some hopes in the biodiesel sector that which is also actually, for the time being, is a little bit in uncertainty, as that last year, by the end of last year, the blenders tax credit expired, and now we are turning to a producer's credit. But so far, we are still waiting for the instructions on how they are going to implement this producer's credit. And I think that the EPA and are still, they just collected the feedbacks by beginning of April. And I think this could play an important role that could digest some of the supplies in the US domestic market. And I'll be happy to hear Seth's comment. Thank you.
Yeah, Dee, I think you're absolutely right, which is yet another uncertainty for us here in the United States in terms of, facing South American production. What is domestic demand for soybean oil and soybean crush in order to feed biodiesel? And yet over the last several years, we've seen tremendous amount of imports of used cooking oil. Does that used cooking oil continue? Does China, the tariffs on Chinese product, where else does used cooking oil come in from? Right now, as you also noted, we entered the year with not a tax credit in place, or not a clear tax credit in place. And we've actually seen biodiesel and renewable diesel production decline pretty sharply at the beginning of the year with the uncertainty in terms of tax policy. Now, do we get some clarity on tax policy? We're expecting shortly, EPA has said they will produce new renewable fuel obligations for 2026 and 2027. Are they modest increases? Are they medium increases? Are they step increases? So I think there's a lot of uncertainty on the biofuel policy side as well, too, which is good because, Joe, you'll have lots of seminars that you can do over the next 12 months.
Well, we already did one on biodiesel, so I'm looking forward to doing the next one at one point in the future. But I would like to now bring in Nathan and Erin, and maybe also a little bit of Dee and you said. So we spoke about the geopolitical tensions and the trade policies. I'm delighted that the latest WASDA report does incorporate the 90 days suspension with the Chinese tariffs. But how do you guys see that? How might the geopolitical tensions and trade policies affect the export and import dynamics for your respective commodities? If you can each comment, maybe starting from Nathan.
Yeah, thank you very much. So we've seen some tampering down really of these trade policy uncertainty. I think first of all, this started when Mexico and Canada was sort of excluded with this extra 10% duty. The big background, we still have issues with the EU. So the EU 25% tariff on US maize imports has been paused, I think, from 15th of April, 90-day pause. That's going to be the next area of interest. Of course, we've seen US really shipping large amounts into the EU of maize this past year. So it's been a very interesting market there. But when you look at these two countries, we've got China, we've got EU issues. Who sets to benefit from that? Really, it seems to me to be Ukraine, really, because Ukraine is non-GM corn. Its own domestic needs are fairly small. So if it gets a good crop, it's able to export quite a lot of maize. And we've seen that recently, actually. And we expect that Ukrainian farmers are going to be able to increase maize plantings this season. Hopefully with better yields, a larger crop. But this is one area we are closely watching right now. There's been some difficult weather. It was a little bit too cold. It's been too dry. Plantings have ramped up the last couple of weeks. So things are on a knife edge, I'd say there, whether farmers follow through these intentions to really increase maize area there, or will they look at the weather forecast and see the dried outlook and think, actually, sunflower seed may be a better bet. So that's one area that we're looking at. Ukraine could be one of the beneficiaries, we feel, from this policy.
So you see it more in the Ukraine as opposed to Southern America, the winner of the current situation?
Well, Southern America, yeah. I mean, they can play the long game because their next crop, they won't be sown until October, or the next second safrinha crop in Brazil is going to be formed next February. So producers there, they can step back and see what's going to happen next couple of months, and then they'll be able to react to what goes on over the summer and as we approach the end of the year. So yeah, they're still in a wait and see. But it could be if the Brazilian soybean farmer plants more, so they've got a bigger demand into China, that could open up a little more area for the next maize crop. But as I say, that's next February, harvest next June. So a long way off there, yeah.
Thank you. Let's hear from Erin. Erin, over to you.
Yeah. So I would say overall, the trade policies and uncertainty surrounding that has been less of an impact for wheat markets than it has been for maize and soybeans, obviously. Namely because obviously the big tariffs that were put in place between US and China. I mean, China has pulled back their imports of wheat this season significantly. They're importing less than half than they did last season. So already their wheat purchases, not as big of a factor. They also haven't been purchasing from the US. So not having a massive impact on wheat markets there. Also, China has other options that they would purchase from wheat from anyway, Canada, Australia. So in essence, not a really big impact. I mean, if anything, if China in this, next season or thereafter increases their wheat purchases again, could potentially, I mean, and this is a lot of ifs, if they increase their purchases, if the tariffs come back into place that, at the level that they were at that are as prohibitive, then it could potentially benefit the, export dynamics for the other major exporters that would perhaps get that, greater demand from China. But that's a lot of ifs. So as of right now, not a lot of impacts there. In terms of, the baseline, as Joe, highlighted, there is a, baseline 10% tariff from the US on other countries. In terms of that, again, also not a big impact. It really depends on the retaliation, I guess, measures of countries on the US imports, but haven't really seen anything big there for wheat. Obviously, especially since Mexico is excluded from these levels. So, obviously keeping an eye on other main wheat export destinations of the US, Philippines, Japan, Korea, Taiwan, to see kind of what the trade relations, how they go there. Also, as Seth mentioned, mostly just watching to see what comes out of the negotiations, if wheat is included in increased market access anywhere. I guess, recently with the UK trade negotiations, seeing agriculture in there in general, I think has been kind of flagged as promising for agriculture being part of the trade negotiations in general. But, if wheat is a specific line item in there, yet to be seen, obviously. But yeah, I think lastly, another factor obviously is going to be who has the supplies in the next season, as trade deals shake out, and we'll see. It's not just a matter of trade deals, but also who has the supplies to step in and shift gears if needed. I would say perhaps maybe a reason also, in addition to this, why wheat markets haven't really had a big reaction to these dynamics is perhaps, the 2022 shock was a massive shock for wheat markets. And I think wheat markets really had to, from that, recent experience, shift gears so quickly. I almost kind of wonder if there's a little bit more flexibility in wheat markets for that reason as well. At the global level, obviously. So yeah, I guess overall, all of that to say, not expecting to see in 25-26 massive impact on wheat markets for the trade negotiations and trade deals, but to be seen. A lot of ifs, a lot of uncertainty. So waiting to see what happens there.
Thanks. That might be the famous last words. Dee, would you like to add anything in 2 minutes so we have time for another round of questions?
Yes, so I think we've been discussing about the US-China trade negotiations already, but I would also like to bring some other perspectives, especially considering that US is also, they are discussing also with Mexico, Canada, and in particular because as for Canada, they are a big exporter of rapeseed, which is canola. They call canola oil to US, and those are also a big, since 2022, it's also a major source of feedstocks for the biodiesel and the renewable diesel in the US. And so far, I think they are still in negotiation, and I think if there's any disruptions to the rapeseed oil feedstock flows to US, the US producer for the soy oil crushers, they might benefit a little from that negotiation. I would just like to add that. Thanks.
So before I pass the floor to Joe, I have a question for John. John, I mean, we have done a lot of projections. We have been discussing since the 2008 price hikes. You were doing the work you are doing now, and there were a lot of uncertainties. Then we talked about the 2011 price hikes. Then there was the start of the war in Ukraine. Given what you've been through, financial crisis, etc., how confident are you about the projections you presented to us this afternoon?
Thanks. You asked the right question. I think I have seen a lot for good or bad reasons. And in fact, I was thinking about that question and going back through all the kind of shocks and changes and whether were man-made or natural disasters throughout the past 20 to 25 years. I was thinking that we had difficult time to put together our projection twice in the past sort of 25 years. The first time was during the financial crisis in 2008, 2009. That's when we had big difficulties coming up and firming our forecasts. Basically, we were changing our mind by the day. That was I would say, the worst. And the second worst was during the pandemic. We also had hard time pinning down the forecasts. I mean, to be honest with you, this time we did not have much of a difficulty. I don't know why, but I do want to go back to what Erin made. Erin made a very interesting point at the very end of her intervention that about wheat, that we went through the turmoil of 2022, and probably, if I could paraphrase her, is that the markets learned of how to live with turmoils, and this time they adjust much better. Probably this is the case now for overall commodity markets, that we had so many shocks. We had the pandemic in the past 5 years. So we had the pandemic, we had the Ukraine-Russia war, we had the Middle East, and now we have tariffs. Probably markets have learned how to cope with it. Further to my answer, just to elaborate a bit more, we start our forecast process in early to mid-March, and we publish the report in end of April. So we do a first round of forecast by mid-March, and then we do the final round of forecast by mid-April, which is what appears and what everybody sees. What was interesting this time is that, in fact, we did not make much adjustments going from March to April. Despite all the turmoil that was going on in terms of tariffs, policy uncertainty, etc., our forecast did not change. We do take into account many factors. Of course, we look at what USDA says, IEG, IGC, FAO, of course, on the grain side. We talk to our macroeconomic colleagues. We look at exchange rates, growth prospects, etc. We have a bit of modeling, many models which my colleagues take into account before we finalize our forecast. And in fact, I was thinking it was quite surprising how little our forecast thinking changed between mid-March, when we began the process, to mid-April. I don't know why this was the case, but to answer your question, Monika, I think we feel much more comfortable, especially when we compare our forecasting, so to speak, cycle with what was going on in the financial crisis and during the pandemic. Now it's much more comfortable.
Well, that's very comforting. Thank you. So I will now pass over to Joe, the research fellow emeritus, which does not mean old, for the record. So Joe, if you have any last questions,
no,
the floor is yours.
I just want to make a couple points, and that's again on this whole issue of at least for these the crops that AMIS covers really concentrates on. If you look at wheat, I agree with Erin. I think that is very diversified in terms of the number of, I mean, we tend to focus on Black Sea because it's so important, but there's a lot of other countries, as we found out in 2022, who are able, if prices are high enough, are willing to export wheat. And we saw a lot of wheat come out of places that we traditionally don't think of. India, Brazil even was exporting wheat. And certainly, I think for corn and soybeans, it's obviously a bit more concentrated, but you do have the southern hemisphere diversification, which I think is very important. And I think Nathan pointed out that you can make that adjustment. When the southern hemisphere sees high prices, producers in the southern hemisphere, they can react. And similarly with the northern hemisphere. And this is something now with half of production, at least for soybeans, or more than half now in the southern hemisphere. It's very, very important. And maize, I think we're seeing that as well as that developed. I just want to mention a comment that came in from Nathan's colleague, actually, at IGC, Darren Cooper. He mentions that at least in the IGC 10-year baselines, when looking out, that they see half of the growth in soybeans coming from non-China sources. So that gets back to an earlier question that we had. We are rapidly running out of time. I do have one last question I'm going to bring Brian back into it. We had a question from Nigeria, Brian, and they were asking about just overall crop conditions and things like that for Nigeria. I mean, we've been focusing a lot on the grain and oil seeds and everything, but if you can just kind of address the crop condition outlook, at least from GEOGLAM's perspective.
Certainly, Joe. Thanks. Looking in Nigeria, honestly, right now things are just starting to sow really in the southern regions, and those are under favorable conditions. And with Nigeria, we always have to discuss that the ongoing conflict in the northern and northeastern areas are particularly always going to continue to impact those agricultural activities, at least for the AMIS crops. Looking at maize, rice, and soybean, those are sort of more in the central and southern areas, but we do have some of that in the northern areas. An additional thing to mention is that in addition, we have elevated input prices, and also limited loan access, which will likely constrain production levels in the country going forward. And as of right now, we're looking at above average rainfall for this season. However, we did see an initial delay in the rainfall onset in some central and northern areas. So we could see reduced plantings in those areas this season.
Great. Well, look, this has been an excellent 90 minutes. As usual, great job to the panelists. Thanks, everyone. Monika, thanks so much for helping corral this crew and get the questions asked. We got through most of the questions that came in on the chat, which I'm happy with. Again, a lot of ground to cover, and I think the speakers did it very, very well. And I was really pleased with the interaction that we had. So with that, we'll keep watch. We'll have we're going to likely have another webinar, hopefully before the summer's ends, but certainly a lot of topics out there, and I suspect we'll be revisiting some of these topics as we move forward. Thanks so much to the production crew at IFPRI, and with that, thanks everyone, and we'll see you next